cracking investors? It is a weekday. That means it's account update day. And I'll take you through the account. I'll show you all the positions, relative performance, blah, 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 blah. You can pause. I'll give you the investing tab. Talk a little bit about the markets. It was brutal. Let me save you something, or prepare you rather mentally for the downturns of this account. Although today was a green day, I managed to land in the green as well, but not as much as the market. So I've been losing to the market for like the last month, and it's really not good. Here is the account. I'm sitting at 158, so I was all the way down at 156 before today. Pretty far down, but not at the June lows. So at least that's something. Today I was up 119%, and looks like I'm down on almost a percent on after hours. On the week, I'm losing, I think, to the markets as well, minus 4.28%. 1 month has been absolutely brutal. So 21% down. Pretty much made up all my gains against the market back, and now I'm even probably. Let me see, I haven't done the year yet. So 3 months also really bad, 10% down. Year to date down 14.71%. Just not good, not good. 1 year I'm actually negative now. I used to be positive, but now I'm negative 0.34%. The all-time chart. Everybody wants to see the all-time chart, right? Fine. Here. Pending. Okay, so when I show the all-time chart, I also have to say that I started investing seriously with this account on August 28th, somewhere around here, 2018. And then about 116% gains ever since. Better than the market, fine, but not to my standards. Let's see what the market did versus my performance, all right? We're going to say the market is the SPY, which is an exchange-traded fund tracking the S&P 500. Now, one day I obviously lost by a little bit, 0.5%. On 1 week, I'm losing by like 3%. 1 month, I'm losing. 3 months, I'm losing bigly. So the market's only down 5%. I'm down 15%. So I'm a little bit levered. I play with leverage. And that's been hurting me when it's a bear market. So it's been a significantly difficult bear period. I'm not used to underperforming the market by this much, even on the way down. But I think the biggest thing is that, one, Apple decided to reduce their guidance for the phones made. The 14 iPhone 14 is not doing too well. So they reduced the expected deliveries for that, right? They told their basically manufacturers to reduce the amount of phones they should be making because they're just not going to sell. The demand is not there. They're getting hit by a demand problem. However, the Pro version is still doing all right. So I'm hoping that because it's higher priced, the margins I expect are higher, and I'm hoping it makes up for all the losses. All right, so that's what's going on with Apple. Now, other things that hit me is Smith & Wesson, of course. Sorry, one sec. This is not the account. This is the SPY. Oh, we're not done with the SPY. Not done. Going back. Okay, so that's 1 week, 1 month only. Oh, it's 8% down. Okay. 3 months is 5%. I'm down like 20. And 1 year, I'm down like about even. And 5 years, obviously, I'm beating. They don't have a year-to-date chart that I could check out on this one. So other things that crushed me is the Smith & Wesson position. But before we get into that, I'm just going to quickly scroll through all the positions so you can see exactly what I own. You can feel free to pause the video player at any moment to try to read into all the positions details. All the information is going to be in this little highlighted box. The ADRs or PayPal apparently did all right today. That's good. So Apple's had a really bad day, which erased all of the gains I had from the other stocks. Main Street Capital and Realty Income bounced back, as well as Paramount, and Smith & Wesson was actually in the green before it closed, but after hours it got hit. So those are the positions. Let's take a look at Smith & Wesson now. I sold 5 shares of Smith & Wesson. Profit taking. I made $1. So very proud of myself. These are the option positions associated with it. It's been a pretty severe downtrend, minus 53% of the year. 3 months is down 28%. 1 month 24.65, and this is probably why I'm having such a bad month. Is because like 30% of the account, 31% almost, is comprised of Smith and Wesson. And so if Smith and Wesson is not doing well, the account's not doing well. That's just how it works. Okay, on the week is actually positive, but 1 month, look at this, 24% in the negative. Now that Apple's underperforming too, it's going to be rough. But you know what? I'm sticking to my guns. I think these stocks will outperform the market, especially combined with some premium from the options. It should make it up. Speaking of premiums, I'm getting a dividend from Smith & Wesson of $802. So it's quite sizable. 10 cents per share is their dividend. They're yielding a little bit under 4%, I think. Well, actually, exactly 4% if they keep this dividend up. Let's go into the investing account, the investing tab, shall we? Look at this leverage. It's huge, $109,000 almost. It's quite a bit, especially at this point in the market. It may not be done selling off, and so I might be a little bit of a trouble if the market keeps crashing down. We'll see what happens, but right now this is it. This is where it's led me, and this is where I'm at. 40% says here, but it's actually double that, right? I'm 80% levered. Only have this much to go. I can't lever more than this cutout green part that I'm highlighting with my mouse. Up to here, that's it. So I can only go to 50%. So 50% borrowed money and 50% equity. That's my max. Okay, I'm 10% away from that. If I go to 50% leverage, that means 100% levered. That's how it works. Okay, total return, only Apple's in the green. This is my longest held position in the account. Equity, Apple is also the biggest position in the account, followed now by Smith & Wesson, making its debut at number 2 with $82,000. Already lost me $22 almost $1,000 that I could have had in my account. But I went for a big play. I thought it would work out. Didn't. Now I just gotta dig myself out of the mess. Paramount Global, same thing. I try to make a big play, big mess. Now I gotta dig myself out of the mess. Let's see if I can maneuver out of it without losing too much money. Realty income's pretty flat. Main Street Capital a couple $1,000 down. But honestly, I probably made more than $2,000 from Main Street Capital just from dividends and premium. So I'm still kind of positive on that. All right, back to the investing tab. What else was I going to say? What else can I show you here? I think that's it. Investment. Okay. All right. So as far as the future goes, what I want to try to do is, as always, continue what I've been doing, which is to stick to my trading method that's been working for me for the last 4 or 5 years. Here's what's going to happen. If the market goes down, continues to go down, I might just start selling off equities and go into leaps. I know that this is dangerous now to do because in the past 10 years, blah, 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 buying the dip has been rewarded because the Fed has stepped in. Now we have a different environment, right? We have an inflationary environment, not a disinflationary environment. The Fed is actually trying to bring equity prices down. Don't fight the Fed, etc., etc. But the thing is, that's just talk. We think the same way every single time the market's dropping. All right, and the Fed always comes to the rescue. So this isn't going to be any different. People think it's going to be different because they can't lower the rates because we have an inflationary environment. But I think that they're wrong. And even if the rates stay up this high, the stuff I own actually produces a really good yield relative to the rates that are out there, relative to bonds. Paramount's got a really nice dividend, and they owe cash flow. And then Smith & Wesson's likely to survive a downturn. And they're both companies are trading at like 4 price to earnings. I know that's going to be less in the future, but still, like, there's quite a bit of margin of safety underneath that company. And none of those companies are going to go out of business. Maybe Paramount might get bought out by someone else, content by some of the big streamers, but irrelevant of that situation, it's not going to disappear overnight. Neither is Smith & Wesson, and definitely not Apple. Apple's not disappearing. It's not going anywhere. And I feel pretty good about this mix of stocks. Apple alone has got diversifying factors all over the board. I mean, if you think it's a healthcare company, it's one of the biggest healthcare companies out there, right? If you think it's an information company, it's one of the biggest ones. If you think it's a hardware company, it's one of the biggest ones. If you think it's a consumer goods company, it's one of the biggest ones. If you think it's a insurance or finance company, it's one of the biggest ones. You got Apple Card, etc. Whatever you think Apple is, it's a company that's world class size. Like it's got content. It's an entertainment company, one of the biggest entertainment companies in the world. So they design chips. They're even semiconductor company. Like they do everything. So I feel pretty good about diversifying just with this company. And then, of course, I got Smith and Wesson, which produces guns, and Apple does not. And then I have real estate with Main Street Capital. I'm exposed to small business. I'm exposed to small business with Main Street Capital, and then Paramount is an extra leverage on the streaming industry, entertainment industry. So I think that entertainment actually does pretty good in the downturn, inflationary or deflationary. People are gonna have to have their entertainment in order to kind of like survive the bad times, take their mind off of their maxed out credit card or whatnot. So I think all of my companies will do well. They just haven't so far, so I could be wrong, but I'm still sticking to my guns at this point in time. All right, so that's the account. This is the account review. I really like doing the shallow dives and company reviews. It's my favorite part, so I'm gonna do as many of those as I can when I have time. Probably on the weekends when the markets are closed. So look out for those, and I'm gonna try to do as many of these account updates during the week and see what's going on. A little bit of a bounce today in the markets. See what happens. I mean, I'm curious if this is gonna stick around or it's gonna do a quick reversal tomorrow and go for an even sharper leg down on Thursday and Friday. All right, that's it for now. Hopefully y'all made more money than I did. Peace out.